I made a really great video going over all the sectors, and then the program that I used said that it was way too long. So I'm going to make this just a little quicker, and the charts are already drawn, but I'm going to go over the market as a whole. SPY, I see a lot of naysayers in the market right now, and I see a lot of pro bears. I could see both positions, but there's just a range that I'm watching right now. And so on that build out of range on the S&P, I'm watching the 2033 to 2120 area. Right now we're finding quite a bit of containment, though now we've seen a bigger build out of volume here in the 2072 to 2074 area, where the high volume node is on the 3-year at least. We can see degradations of volume after that, a little bit lower. But for now we're focused on this range. If you're trading spreads, you're looking at containment right now in between 2065 and 2120. Though if we do see a break higher, it's going to be quite immediate. You could probably see a test up into 2135 and be safe. So let's break it down into sectors real quick. Let's look at the XLB. Why does it always do this? Anyway, thanks if you're watching. Fix your shit. Every drawing in the world's always on. So let's just run them all out into 20 years. And we're looking at the XLB. We see that XLB is basing the 23.6. Got to bounce off. It doesn't look too bearish. It's coming into a little bit of volume. It's rejecting the shorter term 23.6 here at 46.27. But no reason to be too bearish unless it breaks down past 44. If it does break down past 44, we're going to see a trip down into the 40s. Second component, XLE, the worst one. In XLE, we see that we've broken down through the 20-year volume here, contained within 68 to 677. We've broken into this null, and the null really does drop all the way down into the 63 to 64 range, where there's a little bit of spike in volume, not too much. I would expect a bounce there back into test 68, but ultimately a drop into the 60 range would be expected, if not a little bit lower. You've got the high volume node down here into the 55s. I don't expect to see too much of the 55s, 54s get tested, but it's a good possibility with the pricing of oil and how everything's going in the economy. So XLE bearish. XLF, we see a lot of stagnation here within price now. It's sitting above the high volume peak here in the 24.6 area, but it is still sitting below the 61.8 long term at 25.81. I still am a big bull here in the XLF sector. I wouldn't expect to see just a little bit of sideways and up. JPM is the leading sector, or JPM is the leading stock in the SPY right now. If we look at it on the short term, here, JPM is trading 21% over SPY in the last 6 months, while our negative component is ExxonMobil. You see Apple's precipitous drop here from the earnings, but again, Apple started to turn up today. We'll have to watch it. We talked about it a little bit earlier. Other than that, everything is really trading well within just a range. We do have a little bit of a drop here off earnings on Microsoft, but it's still trading higher than the 6-month start. We're just going to have to really monitor Apple here. Some of the bigger components, Microsoft pretty flat. Again, we're looking at ExxonMobil dropping just simply because of oil. So if we remove all studies, let's go back into the 20-year, and we'll go to the XLF. XLF banks great again. We're looking at a break over the 25.81 area if we really want to get anything good. This is one of my favorite sectors. The XLI, we're looking at really, let's check the volume. We do have a volume build out here. Let's get a little bit closer. We see that the 3-year high volume node is here in the 24-quarter range. Volume pushing all the way into 24.66. Not bearish, not bullish. More bullish than bearish. Wouldn't expect to see a drop past the bottom here at 52.50. But a push up through 54.66 is definitely bullish for the stock or the sector. XLK, we see a bit of stagnation here. Apple is the leading component of this sector, and even though it's down 21%, the sector is still held pretty flat here in between the 42 and 44 area. Apple holds 16% of this sector, and for it to hold the 23.6, to me says a lot about the structural integrity of the sector. XLK is 22% of SPY, or of the S&P 500. So seeing this sector of all hold so well speaks well of the actual overall market. So XLK certainly not bearish. Certainly looking bullish if we can get over 43 and hold. The XLP, certainly the most bullish sector of them all. We can see the 3-year build out here into the 50s. We've just broke over, and looks like we're gonna be testing well higher into maybe the 51s. Certainly nothing bullish about the XLP. If you're interested in the XLP, I believe it's Procter Gamble, Coca-Cola, Philip Morris, CVS, Walmart, etc. Next is the XLU. XLU, kind of resistant. Let's see what it looks like on the 20-year. 20-year, we're still sitting into volume, above volume at the 23.6 on the medium term. On the longer term, we've based the 23.6 and we've bounced, rejecting the 38.2 short term at 44.55, but finding acceptance at the short term 23.6. I wouldn't short the XLU at all. I wouldn't call it bearish. It's got a lot of volume under it to contain. Above it does have a break of volume up into maybe the 45.5 area. Might not be the or the sector I play, but still not bearish. XLV, this is just really bullish. Other than this build out on the 6 month, we're looking at volume support from 76 to 77 quarter to 78, or 76, 78. All-time highs at 77.4, and then you're looking at a push into the 138.2, all the way up into the 168 from 78.5 to 79.25. Again, not bearish. And then we move to the XLY. Again, not a bearish sector at all. Within the 3-year, we can see that volume is built out here into the 23.6 of the medium term, 76.25, with volume all the way really up into 77.75. Price rejecting 80.61, but still, again, not really a bearish sector at all. If we get a little bit closer, we can see a pretty hard rejection there. But other than a move into the 77 to 76 area, it's not that bearish. So what we're seeing, while main component, the biggest component of the overall market is dropping, is the market supporting that component. If that component is to rebound while the market is supportive, then we can see a move higher up and out of range and a break of that 161.8 that we looked at earlier in the 213.4 area. If that break is lower, then we're going to test into volume. If we do move lower, the move isn't going to be as quick. It's going to be a very degraded move. It's going to be probably pretty slow and monotonous. You hit this pocket of volume here into the 205 to 201 range, and then a little bit lower. If a drop like that ever does happen, then we can do a little bit of measuring and figure out where all the targets are. But for now, what we're looking for is just a directional break out of this containment. Until that happens, it's a very stock-specific market. You've got to time them right. You've got a lot of stocks that in the NASDAQ that are sitting well within a range to break higher. You've got Google here within a volume null and a possible test into the 682s. You've got a price line that's a little bit hobbled. Again, we've talked about Apple, which has fallen, but it's still trying to pick itself up. We've got a Microsoft stock that is sitting at the 78.6, and it's also sitting above volume on the 3-year. A very interesting chart, and I definitely think that a break over this 48 area will definitely get Microsoft moving. But for now, there's no real reason to see or to think that there's going to be a drop in the market. A lot of naysayers right now, and I think that it's not their fault. It's not the market they're used to. The market they're used to is a very quick market. We saw it because of the QE infinity that was placed so long ago, but again, you see precipitous moves like this, and then you see stagnation. There's not a lot of months or a lot of times that you see this kind of stagnation. You're at well, 1, 2, 3, 4, 5, 6, 7, just within range. The last time the market had 7 candles was within a range. It was 1, 2, 3, 4, 5. I mean, right here at the 1344 range. A small top again, small top and small top, but until this really does break down, it's hard to call it bearish. What is called is neutral, and there's a lot of fear being put into the market via mass media, but until it breaks down, or there's a reason to break down, there's really no reason to hold a overly bearish position on this market.